Gautam Shah also joining us this morning. Gautam, good to have you with us. We've got some new records, banks continuing to see strength in the Bank Nifty, the IT index. What's top of mind for you currently?
Well, I think the rally is getting broader. I think that's good to see because the complaint in the last 6 months was that just 5 or 10 stocks were taking the Nifty higher. And now there seems to be a sort of musical chairs, playing out among the sectors. So many of the underperforming sectors of the last 6 months are coming back, and that is helping the markets, to test new highs. Also, I think for a lot of market participants, this is a rally of disbelief because the kind of news flow that we've had in the last 1 month, for most market participants, it does not warrant a Nifty to be at the levels of 12,100. And typically, if you look at the last 10, 15, 20 years, whenever tops happen, there is a lot of belief that the market will move to higher levels. But right now, at lifetime highs, there is a lot of disbelief. So this just tells you that we are far, far away from topping out. The setup on the charts continue to look very strong. I think the volume activity is going to get better going forward. The momentum is picking up by the day, and as I alluded earlier, the breadth is going to improve with more and more sectors participating. So we have been working with a near-term target of about 12,300 to 350. We feel that the market could get there in the next couple of weeks, and then you could see some profit taking there. But eventually, I think this market is clearly headed to a level of 12,700, which is our bigger target. And while the Nifty gets there, I think a lot of stocks will do well. So it's not going to be about the index anymore, because on the index we are just talking about 4, 5, 6%. But I think in this move, stocks will do well, and I think the risk reward to go long even at 12,100 is quite justified. So we see the new base for the Nifty at around 11,900, and we are recommending our subscribers to add on any dip that might happen on a day-to-day basis.
Also pointing out that the rally will get broader. Does that mean that mid cap, small cap will participate in a much better way than what they have done so far?
I think so, absolutely. Every time there has been an attempt to break out by the mid-cap index, it has failed. And we have been highlighting in our reports this 2-year trend line, which started off in November 2017. And this trend line has worked beautifully as a resistance every single time the mid-cap index has attempted to break out. As we speak, the mid-cap index is back in that area of 17,000, 17,200. And if this zone were to get surpassed, which I think is likely in the next 7 to 10 days, we should see the mid-cap index run to a level of 18,500, and eventually our target for the mid-cap index is about 20,000. So that's a good 20% away from current levels. So that's our view on the mid-caps. If you look at the small-cap index, and if you see the relative strength charts, so we plot the small-cap index over the Nifty, that ratio is currently at 0.45, and in the last decade, whenever that ratio has hit a level of 0.4, 0.5, it's usually a fortune-making opportunity. So I would recommend your viewers to not look at it for the next few days or next few weeks. I think this is a recovery that is going to play out over the next many months. One could invest into the mid caps and the small caps passively, and I think there is serious returns to be made over the next 6 to 12 months or 18 months.
We talk about the technology sector that's also done well in the last few days. Do you think the rotation that you were talking about is playing out in the technology pack? Because in the last 2-3 months, some of the large cap stocks have really not done anything for that sector. And now suddenly you're seeing some interest with volume action.
No, as you rightly mentioned, it's only in the last few days, so I wouldn't be very encouraged about that. If you look at the last 1 year, the technology index has been in a band of 10%. So during the difficult times, this was great because people got a place to hide. But now as the markets are picking up steam on the upside and more sectors participate, I think technology will continue to be an underperformer. And what has happened in the last 3 days is temporary. So yes, you could see some more trading upside, but nothing significant. I think our top bets in the markets currently are pharma, where I think a 3-year bear market could have ended, and therefore there is potential upside of about 30 to 40% for the index. So obviously you will expect stocks to do much better over the next 12 months, followed by autos, which has been the talking point for the last 1 month, for the last 1 year. Serious price destruction there, and because the fall was so large, the scope for recovery is equally large. So the top 3 or 4 names in the auto space also we like, and that would be followed by oil oil and gas, where clearly Reliance is, leading the pack, and I think this is just going to carry on for next many weeks and many months.
Okay, so any particular themes that you're focusing on then, Gautam, apart from the fact that you're actually now looking at the broader market, where would you focus your attention?
Well, that's a good question about the broader market, but the problem is, if a turnaround does happen in the mid-cap space, you want to restrict yourself to the top 50, and that is probably the reason we are looking at themes only in the top 50 mid-cap stocks. So, one can look at the Nifty Junior, or you can look at the Nifty 100 index. I think there are themes there in the cement space, in the sugar space, some of the auto ancillary stocks. I think they look quite interesting. But let me also add a point here. Global equities are in a wonderful space right now. If you look at most markets across the world, they are breaking out after months of consolidation, and I think this global equity rally, I think, is going to carry on for many weeks and many months. And if that's going to happen, it's only going to help India. And I feel that this disconnect between the large caps and the mid caps is going to get narrower and narrower as we move forward. So the opportunities are clearly there, in the top mid cap 100 space, the small cap 100 index, and I think one should concentrate on that.
All right. Anything one should avoid, when it comes to sectors, or anything you feel is not likely to participate?
Yeah, there are some changes that are happening. I alluded to the fact that there is a sort of a musical chairs among the sectors. So capital goods, I think, seems to have lost its way. I think it's ranked number 8 on our list. So we would recommend a complete avoid for that index. And FMCG, barring a couple of names, the sector seems to be completing a large bull market. So there we do not see relative strength, and therefore I don't think there is much money to be made. So apart from these two and technology, which is pretty much in a range, we don't see downside there. All other sectors have a very good setup in the current market scenario.
SPAC, especially steel stocks. Some of the steel stocks really rallied yesterday, led by some upgrades.
Well, that's a good one, because we have turned bullish on metals. I think metals have been a big underperformer for the last 12 months. Yesterday's rally looks genuine. Many of the top metal stocks, have developed some lovely setups, and these are setups that have come after a lot of pain for many months. So again, just like autos, the scope for recovery is equally large, and the top 3 or 4 names in the metal space we feel could appreciate as much as 20-25% over the next few months. So if somebody wants to, look at supernormal returns, I think pharma and metals are my 2 best bets for the next quarter.
Thanks so much for that, Gautam. Always good to get perspective with you.